Welcome back. As promised, let's get into a conversation with Filatex India. It is in focus. The management recently said China's continued zero-COVID policy adversely impacted the Indian polyester industry over the past few months, and a weakening rupee also weighed on its earnings in the quarter gone by. The stock is lower by 1.5%. But what is the outlook now since some of the relaxations have kicked in? Madhu Sudhan Bhageria, the chairman and managing director at the company, is joining us now. Mr. Bhageria, good afternoon. Thank you for joining us. Well, you've been telling us how Chinese goods have been getting dumped into the Indian markets at lower prices, and that is something which has been impacting revenues and margins for you as well. But how have things been now, January onwards, since we have seen some relaxation there? Your gross margins and margins have improved on a quarter-on-quarter basis. How is Q4 looking, and will you be able to see further improvement in margins, say from these 4% levels?
Yeah, good afternoon. After China opening up, definitely the margins have improved. But it will take some time, because now after the Chinese New Year, the workers are coming back and the demand is still to come back in China. But yes, we can see some improvement in the margin, and Q4 definitely will be much better than Q3. And going forward from next financial year, we expect it to be back to normal. I mean, we should have a EBITDA margins very close to double digit, if not double digit.
All right, because the last time you joined us, Mr. Bhageria, you had said that you would see about 6 to 7% margins in the fourth quarter with double-digit margins in the next financial year. So we would, assume that you are holding on to that itself. I wanted to know about the exports, because the last time you joined us, you said that the export market was weak as well. You expected it to be around 5 to 6% of your sales in the fourth quarter, with it inching towards double digits, low teens in FY24 as well. Do you still maintain that?
Yeah, we are moving towards that. Maybe we would be 4 to 5%, maybe a percentage lower, because still export market is still under China. China is still giving it a better pricing. But yes, it has improved from Q3, and we'll have a better volumes in Q4. And from Q5, I think we should be around 8 to 10%.
Okay.
I mean, next financial year, not
yes.
Q5.
Yes, of course, we get that, Mr. Bhageria. I wanted to understand, when you're talking about Chinese prices being, more attractive than the Indian manufacturers, what is the difference? What is the dumping price? If the spread is higher, do you think it will take some time before it equalizes for both the markets?
See, the main reason is that China, they have their own PTA, and the PTA is in abundance. So the PTA, which is the major raw material for us, they get a better price on the raw material. So almost like 7 to 8% their pricing in that PTA is much better than us. So they get a 5 to 6% extra margin because of the price of the raw material. Otherwise, cost of production wise, we are quite competitive. And also see, in imports, we have a 5% custom duty on the yarn, and even on the raw materials, the custom duty is 5%. Whereas for the local market, we have to pay some extra taxes, which the government gives back in the form of road tab. On our product, road tab is around 2.5%. So technically, we are 2.5% worse off than the imported goods, because they don't have to pay those local duties when they are imported. So we are asking the government to give us some protection, either to reduce the custom duty on a raw material from 5 to 2.5%, or on finished product, make it 7.5%. So we should be at a level playing field, at least in the imports.
Have you heard something back from the government? I mean, you have made your recommendations, etc., but have they spoken to you, or has the industry gotten any response from the government on the possibility of something like this happening?
They have understood the thing, and they say they will take it up, and because you see, it takes time to happen these kind of things. We have put it to their notice, because as per their policy also, when they are giving road tab, so technically road tab is also a kind of tax which the Indian manufacturers are paying. And when you import, you are not paying those taxes. So at least that much protection should be given to Indian manufacturers. Otherwise, they are at a disadvantage compared to imports.
By when do you think, there could be some sort of resolution or some action on this? I understand it takes time and it's difficult to say, but I mean, would you have any inkling?
I think maybe in 1 or 2 quarters, we should have some change in the custom duties.
Okay, all right. So that is on the spreads or the benefits that the imported goods are seeing versus domestically manufactured products. Give us a sense of your expansion plans. Now we are towards the end of this year. What is FY24 looking like? You have some projects which are coming on stream. What kind of capex will you do in FY24? What kind of debt do you have in your books?
The end of FY23, I think we will be close to 300 crores of debt, which will be like 0.2627 to our net worth. And FY24, the projects which we are doing a very small expansion where our POI capacity would go up by 25-30 tons. And we are also adding one more stream of polymerization, which is the cationic yarn. So that we will add, but that will come towards the end of FY24. And the total capex in both the things would be around 60 to 70 crores, not much. So that we will fund through internal accruals. So we are not raising any loans in FY24 as of now. Also, we are doing, I told earlier, some research on the recycling, chemical recycling. So that is also taking good shape. So maybe after Q1 of FY24, we would go for that project. That project cost would be around 170 crores.
So the 70 crore capex would yield you asset returns and asset turns and EBITDA margins of what?
The 70 crores would give a top line of around 220 crores and an EBITDA of around maybe 25 crores.
All right, 10% margins and 220 crores revenue. And the recycling plant you had spoken about as revenue potential of almost 400 crores, right?
Yeah, and there I think EBITDAs could be around 80 to 100 crores.
80 to 100 crores. Okay, so that will be ready by when? The recycling plant?
Yeah, once we take it up, I think it will take at least 15 months for us to bring it into production. So maybe in, somewhere second half of FY25.
All right, so developments happening in the space and some quarter-on-quarter recovery as well. Thank you, Mr. Bhageria, for joining us and making sense of what's happening on the ground as well, as far as the polyester industry and your own company is concerned. That's the word coming in from Filatex. So we'll slip into a short break now. And the other side, in our special segment, Midcap Spotlight, we'll put focus on Mirza International.